Well, Greece is asking for more aid on top of its existing $155 billion aid package. European leaders are meeting in Brussels today, also to finalize Portugal's bailout, which is $110 billion. Will these cash infusions keep the countries out of bankruptcy, out of default? Let's ask Christopher Byrne. He's founder of Goshen Investments, which is part of the Tiger Fund family. His $250 million Goshen Global Equity Fund was Hedge Fund of the Year in 2008 with a return of 73%. Welcome back to In Business. When
Thanks.
I spoke to you in March, you were warning then that you thought a default of some sort was basically unavoidable.
Well, certainly some kind of a restructuring that some could call a default. I mean, there are a lot of word games going on in Europe right now. But really you have to step away from all of these very complicated packages and realize at the end of the day, we are asking the Greeks, and not only the Greeks, but also the Irish publics and the Portuguese publics, to support expanded debt loads. And the debt in these economies is now over 100% of GDP. So this is an extraordinary burden of interest expense and debt being placed upon the publics at a time that they're also carrying out austerity programs and economies are slowing down. So we think the math doesn't add up. It's just a matter of time and how it comes about that some kind of a dramatic change is effected in the European debt picture.
Now, what is a restructuring, depending on how you define it, what does that look like? Because we've been talking about this for a year. There have been stress tests done on banks to try to build up, cash cushions in case something happens. Why are we not prepared at this point as a global financial system?
Well, I mean, let's first start with the stress tests on the European banks. European officials themselves now admit that the first round of stress tests were simply farcical. They left out liquidity, which is one of the most important aspects of stress testing a financial institution. They picked and chose which financial institutions were included in the sample, and it was one big confidence game. I mean, this is ultimately the root of the strategy in Europe, is to play for confidence and time. Now, that's at the root of it, really, is that we're not effecting deep enough changes.
So should Greece get more aid like they're asking for today? What does that accomplish?
Well, what's going to be very interesting, I mean, it buys time, and time is the European strategy, would appear to be the European strategy, and things are not getting better with time, and all that's happening is that we're adding debt loads to these publics. What's going to ultimately happen, in our view, is that there's going to have to be burden sharing, and this will be spread to private investors. It's going to spread to banks. Ultimately,
so the people who own debt of some of these institutions are going to have to take a haircut.
Absolutely. And in fact, really what's happening now, and I don't know that the bond market has fully grasped it, every time the Europeans put in aid and the IMF puts in aid, that aid becomes senior to the existing stock of sovereign debt. So when the write-downs come, it's not necessarily going to be borne by the Germans or by the IMF. They typically get repaid. It's going to be sovereign debt holders who carry the burden when the debt is written down to sustainable levels for these economies.
We should say here, you are net short Europe in terms of equities right now. You're not a participant in the bond markets, right?
We are active globally in a variety of longs and shorts. We certainly find more things to sell than buy in Europe, but I would also say that we are looking carefully at some of the upcoming bank recapitalizations, because these are going to have to come at very deep discounts. And the longer this crisis progresses, the more pain is going to be felt by the bank shareholders and bondholders. Initially in the U.S., if you go back to the 80s, the bondholders of some of the banks were kept intact by the government. As the crisis, the S&L crisis, wore on, the government realized that the drain on resources was excessive, and they began to give haircuts to bondholders. And we think a similar process will unfold in Europe. What does that mean for equity holders? Massive dilution, huge capital raises. And for us, if the pricing of that is attractive, that will be a buying opportunity. But we're not there yet.
We're looking today at the arraignment of Dominique Strauss-Kahn, head of the IMF. IMF very, very active in these bailout packages. What does his removal from the process mean for these conversations? I mean, he was a French finance minister, a participant in creating the Eurozone. He was seen as very much a defender of it. Does an American in his shoes, John Lipsky, change that?
Well, I think there's an intangible element here that is going to be absent from the equation and that has been very important. Because with each bailout, they're not merely negotiating with the country being bailed out. There are also 17 donor nations. So Strauss-Kahn, a European political heavyweight, was in a position to forge deals. John Lipsky, a terrific person with a great record, a very distinguished leader for the IMF, but isn't going to have that je ne sais quoi that a French European politician would have. I also think it tarnishes the IMF. The idea that Strauss-Kahn is flying around the world in first class, in Air France, shipping champagne and preaching austerity. It is going to reinforce the Eurosceptics in Europe, and it's going to reinforce the Eurosceptics in France in the upcoming presidential election. So this has implications not only for the IMF's current negotiations, but also for how support for all these bailouts unfolds in Europe.
So what does that mean in terms of ripple effects? If the European strategy right now is to buy time, theoretically, to protect the financial institutions, to protect Spain, to protect the other European nations, what does his removal from negotiations, at least in the near term, mean for that?
Well, I think that there are a lot of compromises involved in these discussions, and assurances given that he has the credibility to give. He's got the ability to relate to different political players in Europe, whether it's Angela Merkel. Angela Merkel herself has deep issues in her own party. Somebody like Strauss-Kahn can make private assurances, they can look forward to working with him. So I just think it means you've got somebody with, you're losing a heavyweight, and that has an impact.
Chris, it's good talking to you. Thanks for making time today.
Thank you.